what we try to say is we do only very, very high conviction bets, because of course then we know that the support that has to come from us is significant. So what's high conviction? I guess one thing that every VC out there says over and over again is of course market. Given that we have a concentrated portfolio, each of our investments needs to have the potential to become a huge company in the future. So get to the 1 billion valuation mark.
Welcome to the Week in Italian Startup, where we discuss the latest highlights happening in the Italian tech and investment ecosystem.
Ciao Alessandra. Welcome.
Ciao, nice to see you.
All right, so we have Alessandra from Cavalry Ventures. And today we would like to kind of explore a little bit what's happening with the Cavalry, where it has been, where it's going, what is your role inside the company, and what is the future and so on.
Yeah, sure. Happy to give a brief overview. Let me know if I run over a bit, because I tend to do so. So Cavalry is a Berlin-based fund, but we are pan-European. So we invest across Europe. That includes, of course, Southern Europe and Italy. As of today, our fund to investments, for instance, were only 30% in Germany. So the rest was across all the other regions in Europe, especially, I would say, UK and Ireland. So we were founded in 2016. We're currently investing out of Fund 2, which is 80 million. And we are laser focused on early stage. So we only do pre-seed and seed. We also invest pre-revenue. What we say is that we invest as soon as it makes sense for the founder.
All right.
And that can be even pre-product, so not just pre-revenue, but even before the product itself. So that's kind of like our mantra. And the way we do this, so we invest across software in Europe, again, B2B and B2C. We're absolutely sector agnostic. So we look at everything as long as it's software related. And ticket size anywhere from 500K to 3.5 million. As an initial ticket, so we're usually either in a leadership or co-leadership position in the first round we enter at. That translates into an ownership that could go anywhere from 10% to 17%. And then we try to support our portfolio founders with follow-on financing. So Series A, Series B, Series C, as long as we can, to maintain our pro rata. If that's possible. Of course, if index comes in and says, I absolutely do not want you to maintain pro rata, I guess we can settle for that. But that's pretty much the model. And the reason behind the name, so the Cavalry, as you rightfully said, so we have around 200 LPs. 50% of this are actually individuals. Oh, wow. So entrepreneurs, firm entrepreneurs, business angels. We were actually founded by the co-founders of Delivery Hero. And what we try to do with this huge network that the founders have created is we try to connect our portfolio companies with our network and the network of our network. And we think this is especially useful given that the network is actually indirectly invested in the companies. So they have a vested interest in helping them out. And the way we do this is via an in-house platform team. So now we have 3 full-timers, plus we have 1 person dedicated to PR and 1 person dedicated to HR. And what they basically do is any portfolio company would come to me and say, could be any random requests. I get a lot of random requests, but those random requests are usually what you need at the pre-seed seed stage, because you need to get off the ground. So you need initial customer introduction, you need initial best practices on how to build a team, how to scale, how to open up a new geography. So this is kind of the help that's needed at the very early stage. And the way it would happen is that, I don't know, a portfolio company would come to me and would say, look, I really need to speak to a CTO with respect to healthcare data, because it's really particular to Endo, as I'm sure you know. So we would scrap through our network, see availability, see who is the best person to speak to, and then would make the connection. Plus, of course, we have platform perks, discounts on the various Stripe, AWS, and the likes. And we have created a Slack community for our entrepreneurs to connect and to also share some workshops that we organize. So to keep it brief, we keep ourselves really busy. Awesome. Of course, also the investment team also has a lot of sparring with our portfolio companies. And by the way, huge disclaimer, this has to come from the portfolio company themselves. Of course, there are some portfolio founders who are completely independent, who have done this over and over again. They don't really need the level of support that some other founders might need. So we are completely flexible according to what the founders would like to do. But I mean, for instance, myself, I'm on the investment team, and the kind of support that I provide is really on the fundraising front. So now I have a company doing a Series A. I think I felt like I was working full time for them for 2-3 weeks, to be honest, which was really hard to achieve, but it's also very motivating. And yeah, helping them with all things fundraising. So getting a VC list on, getting the introductions to the funds, getting the pitch deck in perfect condition, getting the data room, the business model, etc., etc., etc.
So from the basic onward, you just help them shape the business itself.
Exactly. I mean, of course, they have the vision. They are in the driver's seat, and we're just there to support them if they require.
Awesome. I'm really curious about the signal that you guys intercept in order to decide whether some project is interesting for you or not. So what is it, like, really briefly, like the checklist that you guys go through?
Yeah.
Just to have an idea.
Yeah, of course. And I mean, I think this is a very good question, especially because, I mean, we only do around 10 investments per year, because this operational support would not be possible if we were to do more than 10.
Wait, 10 is not a small number.
Yeah.
Well, for pre-seed seed, I would argue it's actually fairly small, especially if you talk about companies that don't have any revenues yet. Of course, the tickets are a bit smaller.
Sure.
So what we try to say is we do only very, very high conviction bets, because of course then we know that the support that has to come from us is significant. So if we were to do kind of like a Kima Ventures kind of model in Paris, then I think we would not survive with 100 portfolio companies every year.
So what's high conviction?
Yeah,
Tell
exactly. What's high
what
conviction?
Is high conviction?
Yeah. So we do a lot of cherry picking. So what's high conviction? I guess one thing that every VC out there says over and over again is, of course, market. Given that we have a concentrated portfolio, each of our investments needs to have the potential to become a huge company in the future. So get to the 1 billion valuation mark. So that's definitely the first point on the agenda, especially maybe related to this, if it's related to another geography, such as Italy. I mean, there are some markets that nationally are big enough. Of course, given that we're based in Berlin, the support that we provide, if you want to remain in national borders, it's limited. So this is another topic, which is somewhat related to size, but in some markets it's not, such as, I don't know, real estate maybe could be enough to expand into one geography. And second one is, of course, I mean, we invest super early. We don't have anything to go with, right? With respect to due diligence. Maybe we get a number for what you expect the revenues will be in 2026, but that to me doesn't mean anything. So what we really look at is the team.
I see.
And we look at the team in different ways. Of course, I mean, team fit with respect to the product that they're building is always a big topic. There are some cases, though, where actually there have been proven cases where the founder's team fit does not have to be there, like Flexport in the US. I think the fact that they were not coming from the industry was actually perfect for them, because they were like, okay, we can innovate here, like we can actually do something. Awesome. So, I mean, it depends on, I guess, what I try to understand, aside from do you have experience in the topic, which sometimes can also not be there, is how much have you found out about this industry? I try to get smarter as well, so to ask smart questions to understand this. What I want to know right away, what are the main problems? What could get you to not scale quickly? What could get you to not even get the first customer in? Like, what do you think is the main problem? Are the main problems here? And I want to hear the reality, right? Yeah. Because there are always some hurdles. And I think the best entrepreneurs always know what they are, those deals. They always know why they can overcome them. So we try to go really deep on all of these topics. And I mean, business model, I would say, especially if they're pre-revenue, it's the least of our worries, but also understanding, okay, how are you going to spend your money? What do you think is most important to do in the first 12 months? What is the milestone that you want to achieve for the next round? And aside from the market being big, the entrepreneurs also need to have a big vision. I think it's totally fair if you don't have a big vision, but I don't think it fits our personal venture capital model at Cavalry. So I would say these are the two main topics that I would focus on. Yeah.
Beautiful. Yeah.
Nice, interesting. Since you're moving, I mean, I would argue that you're moving quite fast for a small team with a very, very broad scope in Europe. So 10 deals a year is a nice number. That means that probably you're building like a 40 to 50 portfolios, companies in the portfolio.
Yeah, so we keep a lot of capital for follow-ons.
Oh, okay.
So I would say follow-on capital is around 60% of our fund, which is
okay.
a very big amount.
Yeah.
And then we also have an opportunity fund where we do kind of like Series B, Series C, and so on and so forth.
Nice.
And as of today, it has not been enough because some of our Fund 1 portfolio companies and now Fund 2 are actually performing quite well. So we needed to raise other pools of capital as well, kind of like SPV format.
So it's a three sort of structure: Fund 1 and 2, plus the opportunity.
Plus
kind
some
of
SPVs here and
SPVs
there.
here and there. Okay,
For
awesome,
specific opportunities, I think
Beautiful.
Our LPs are always happy when they're given the opportunity to recommit in a company that is doing obviously quite well.
Excellent.
This is something that we offer as well, and I mean it's good for us because we get to maintain our pro rata. We get to be there from beginning to end.
Yeah. Awesome.
So yeah.
Hey, what's your favorite type of financial instrument that you use when you enter a company? So it's an equity deal, a convertible note deal. What's
Good question.
Yeah, I mean, I guess there are different situations, right? I guess it depends on how quick the round has to come together. We have used SAFEs, we have used convertibles, of course, especially when it comes to the first round of financing, maybe. When it has to be quicker, the company needs the money in the bank soon, then we might prefer a safe note. We've done a lot of convertibles as well. These are usually quite quick in Germany, and I mean also equity rounds, to be honest. So there's not a real preference on our side. I would say it has to come more on the entrepreneur. But yeah, we were super flexible with that. So we usually let the entrepreneur, even then in the driver's seat, and see how they prefer to do. In the sense of price rounds versus non-priced, I think, I mean, especially with regards to maybe doing a bridge, of course, we always go for a convertible.
Yeah,
because
sure.
It's the easiest. It doesn't make sense to set a price, but I would say when the company is starting out at pre-seed, there is always a price that you can find, I feel, which is kind of like the market standard, right? Because how do you price it on? So yeah, a lot of everything.
And if I may, Jack, one last question out of curiosity, because I'm on the same side of the table, because they're building quite, again, not a sizable, but an important portfolio. You're taking lead positions. That means mostly taking board positions and from within the team, from your network. How does it work?
Yeah. So especially with regards to convertible and safes, as you know, if we do a convertible or safe note as a first investment, we usually don't have a board position. Feels like we have, though. I wouldn't call it board, but I talk to them so much.
It's like a pseudo board.
Exactly.
It's a board, but it's not.
It's not a formal board, no.
The board, we found the pleasure to get a vote.
Exactly. No benefits, but yeah.
No benefits.
Still.
A couple of benefits. So we always try to get a board and an observer seat. So if it's a convertible, for instance, as the first round, we would say, okay, whenever the seat comes along, then please reserve for us a board seat. So we usually like to have that, given that we are in a leadership position in the round, even if it's a convertible, right? Because de facto, you will be the main investor once it converts, and if it doesn't convert, you still want to be very active, right? Because if it doesn't convert, there is a big problem. So we think it's important for us to be part of the board in that regard. We usually come in with a board seat and an observer, and I guess we usually maintain that through Series A. usually board seats at Series A become quite wide, and then Series B, the new lead investor comes along, and then probably at that point you get out of the board. But it really depends on ownership at the end of the day, right? So if you lose a certain ownership, you're out of the board. But yeah. For us, it's important to really have it at the moment where we are the lead, especially. So Series A, the way I see it, we are in the board, but we're kind of like letting go of the entrepreneur's hand, and then the new Series A investor has to come along and say, okay, I'm in the lead now, and we oversee. That's what we try to do.
And in terms of people of your team working with startup, how do you guys like split up sort of the big package of startup like coming in terms of support, because you do a lot of work in portfolio management and development. So I was wondering, is it more of a skill based or ownership? Like what's the way of thinking?
It's super interesting, and we're always trying to find new ways to automate stuff here and there, of course, because it's a lot of work. So the way it would work, so the platform team that I talked about prior has the contact with all the LPs and all the network. So we have no sector focus because of that, because the network is wide, and the type of support that we provide is really not related to sector focus specifically. So they have most contact with our network, so they know what they're up to every day. They know if they're available. They know if they're founding something new, if they want to talk to more startups, if they want to source more, etc., etc. So that is completely up to them. And then every request that comes in usually comes in via the investment team, so it would come to me, and it's either I would know someone also within the network, so I can handle it myself. So sometimes I try to be nice and not redirect everything, or I redirect it to the platform team, who then comes up with kind of like a list of potential contacts that could be interesting. So this list of potential contacts is then sent to the entrepreneur that decides on what contact is the most interesting.
And these contacts are LPs only, or operators also across the border, including maybe devs, marketing and stuff that can be helpful?
Everything.
I see. Wow.
Yeah. And it's
That's
also
really
the
cool.
network of our network and
So
the network of our
think
partners.
of LinkedIn, first contact, second contact, third contact.
Let's go ahead. Let's go deeper. Yeah.
Awesome. So it's a huge network.
So there is a function in the company that actually does the matchmaking, and then comes back to you and be like, okay, this is the list.
This is the list, and the entrepreneurs can decide, right? Because we don't want to be like, this is a name, you go, bye. We've done our job, because maybe they're like, look, given that we're sector agnostic, we cannot know everything perfectly, right? So maybe they're like, look, yes, I like this person, but I think this other would be more interesting for me, for what I'm doing. So again, entrepreneur in the driver's seat, which is really important.
Beautiful. I have a question about the relationship between investors, your LPs, which you kind of want them really involved in the process, right? So how is it working out? Because a lot of LPs, maybe they don't have this kind of attitude of being that involved, but you guys want to develop like expertise and connect the startup founder with the LPs. So how do you manage this balance?
I mean, to be honest, I would say the honest answer is also that LPs are in the driver's seat.
Okay.
And rightfully so.
Makes a lot of sense.
I mean,
yes.
Nick, I'm sure everybody knows here. So you cannot force an LP to be active. But I mean, especially those who have been entrepreneurs, who are current entrepreneurs, past entrepreneurs, and business angels, I mean, they kind of have to be active.
They get it.
And plus, like, it's one of those things where they can never stop.
Exactly.
So it's actually good, because they do not need to be incentivized. So they actually are active themselves. I mean, so if there is one or two or three or four or whatever LPs that do not want to be active, they're also in the driver's seat.
Still. So it's either you do it or it's your problem.
Yeah,
Interesting.
exactly.
So let's talk maybe about the macro VC sector. What do you think?
Sure.
What's happening in Europe? What's your take? What are maybe some highlights that you think are particularly interesting?
Weird times.
Weird times.
Yeah. So I guess I'm in a good position, because I'm in a pre-seed seed fund. So I guess what has been said over and over again is the fact that this is actually a good time to make investments, because the companies that are coming out now are coming in a period of crisis, and it's actually usually a period ripe of good investments. If we look back at the crisis in the past, So from the pre-seed seed stage, I think we are in a position of, I wouldn't say superiority is not the right word. It's I don't like it, but we are in a good position. So on that regard, I haven't seen anything change considerably, aside from the fact that there is definitely more attention on price to some extent. So I seldomly now see the classic, 12 million pre-product, which was quite common, I would say, and it's definitely a high price if you don't have anything to show for. So maybe I'm seeing less of this. Price has been a bit moderated, has come down a bit, I would say, to normal level, not to cheap levels.
That's, if I may, that's interesting because there has been a lot of discussion about the trickle down of devaluation from the public markets to the late stage to the early stage, and a lot of consideration where, early stages will come
later,
next.
but they might not be affected
Well,
even.
exactly.
Yeah, yeah.
That's not true, as you can see.
Yeah, I mean,
good point.
true. It's not true, definitely, and also the fact is that, to be fair, not everybody was raising a 12 million pre, right? It was mostly the kind of like Web3 crypto.
Awesome.
Yeah,
The project.
Or like some places in B2B fintech were also like coming up with the weirdest valuations.
Like the come on guys kind of stuff.
Yeah, 20 million pre. I mean, we're still not the US, right? It's not 100 million pre-product.
Sure.
But still, it was somewhat high for what we were used to. So that is one change. The other change, I would say, it's really on the businesses. Definitely, there is more, I would say, caution towards consumer businesses, just because of the price to run a consumer business right now. I mean, it's getting very expensive. Yeah. So unless you get a specific edge that needs to be crystal clear, I don't think you can. I felt like 2019 to 2021, a lot of consumer businesses managed to raise, especially in fintech, for instance. And now we're seeing that they're not performing as expected for one reason or the other. So it's not as easy anymore. You need to show that you have something special, and it's either in the team, it's either in the product, it's either a specific edge that you have on the market. But now, if you are a consumer business, it's kind of a must. And then with respect to this, I mean, this is all related to metrics, right? Because consumer businesses right now have a huge cost for acquiring their customers, and that trickles down to other sectors. So everybody's looking more at unit economics, as we know.
Which is a good thing. It's like
it's
kind
a good thing.
Filtering out the noise and just getting to the good ones.
Yeah, exactly.
So that's it's kind of an upgrade in a way of thinking.
True. No, definitely. But for sure, there are some sectors, like Web3.
Yeah, the poor guys are like,
them.
damn it, we finished the wave.
Yeah.
The wave is over.
Well, we've had a lot of waves in crypto. So
yeah, that's true.
Like for 5 years.
Yeah.
5 years of waves.
Of waves.
Of waves. One per year almost.
Yeah.
So.
Yeah, that's true.
Well, another market.
So that is definitely something, an example of a space that, I mean, also there, you need to have a specific edge. Now, you cannot just raise something based on the fact that it's a Web3 business, which I felt 2021 was a bit like that. You put Web3 at the end, and then you managed to raise 20 million pre-product.
Totally.
So now, not anymore. And with respect to the other stages, I mean, it's of course I honestly, since the end of August, our deal flow has pumped up considerably. So we're seeing a lot of new opportunities. Our founders, maybe at the Series A, Series B, Series C, I mean, right now, rightfully so, they're kind of like waiting it out because, of course, valuations have come down. So what I feel it's happening is if we can raise an internal bridge and get us to a later point in time where we have more traction to show, it's better.
It's better.
So
bridge are valuable. Bridge are totally valuable. Maybe before it was more like, people are struggling, trying to raise a bridge. So there was always a little bit of a stigma. maybe in
The
specific.
problem is the wrong bridge can kill the company. Because bridge is like expensive from the company point of
Exactly.
view. So you have to have,
Of course, somebody can afford it, some other not.
No, but it can be a good news, like an outbridge, maybe just to delay time and get to a better point in a way that is meaningful for the fundraise, the next fundraise.
I mean, the good thing that I'm seeing with respect to Series C, especially in Germany, is that, I mean, to be honest, there are so many funds that have raised at the end of 2021 in the German market. I'm talking about Cherry, I'm talking about HV, and they need to deploy the money. They cannot wait it out too long.
That's what I was going to say. I mean, there is a lot of dry powder on the market.
Yeah.
I mean,
they need to deploy the money.
Are they being cautious? Are they being particularly
I
cautious?
don't think they're being cautious.
Not at all.
I wouldn't call it cautious, no.
Okay.
I would not define it as such. I mean, they're definitely doing their due diligence, that's for sure. But they have bigger teams now as a result of the money that they raised. So they rightfully have the firepower to do more due diligence, to deploy more. So it's a mix of these two forces, and I'm very interested in seeing what will prevail, because on one end, it's true that valuations, as you also said, have gone down a bit already. But at the same time, there is dry powder in the market.
So it's coming. It's coming. It's like going to invade. Awesome. Interesting.
So, I mean, in Germany, I would say founders are still in the driver's seat.
That's good. That's good. Can be a good
Not just for Cavalry.
Yeah, exactly. For the market.
In the market,
So let's talk about Italy. What do you think of Italy? How do you see Italy from far? I mean, not too far, but
not
from,
too far. No,
from
no.
Kind of abroad. What's your perspective?
What I always say is that if I were to take a 23andMe test, it would be super boring because I think I'm 150% Italian. When you ask associates at other venture capital funds, they're like, oh my God, where to start? I'm like, okay.
Nope.
Maybe I can say that my parents are from Puglia, but I was born and raised in Bologna, but that's about it. So, I mean, I look at Italy quite a bit. I speak to Nicola sometimes.
she's in contact.
Yeah,
That's for
good.
sure.
Yeah.
Like intelligence, like, okay, what's happening down there? Let's see what's happening.
Well, every now and then, she's the one telling me what's happening in
really?
Italy. So,
And you wake up and like, oh, okay.
okay.
At least there's a lot of networking to do in this job, and I'm saying that part I figured out.
Cool.
I have to figure out other parts as well, but that part I think I have it figured out. No, but I mean, I've been looking at a couple of interesting stuff lately. So I would say in the past 1 year and a half, especially because that's when I started focusing on startups in the space in Italy. I mean, there have been some very, very promising companies. I think what is especially useful for the ecosystem is events such as TechChill, or creating the opportunity to actually connect, talk to each other, meet, learn from each other. Because of course there are not many, there are no rules, there are no best practices, there are not that many success stories with respect to the tech ecosystem. I mean, definitely, also when I studied at Bocconi, for instance, entrepreneurship was, I mean, I studied economics and social sciences, so of course, it was not the most focused on entrepreneurship, but still everybody after Bocconi went to either consulting, IB, or corporate. So tech startup was still a bit like, what is that? Now I see everybody knows what it is, right? Everybody's studying a business school. It's still a bubble. Sure. It's still a bubble, but it's less of a bubble than what it was before, which is great. And I think events such as, TechChill or Italian Tech Week in turn, or CIOS, I think it's pronounced, are what's kind of like driving this, because their VC per se is exclusive. It's for the few. In an environment which is very mature, such as the Italian market, it's so restricted to just a few people. So I think that's what's really important, right? If you don't know of anybody having ever had success as an entrepreneur in a tech company, then how are you gonna think, okay, I'm gonna start building a tech company when I'm like 25, 26,
100% agree with you. And not only that, also, I mean, having worked in a company that scaled up is a source of great insight and great understanding of how to build a company that can scale up.
And how do you build a team? What are positions, like VP of?
Alessandra, thank you so much. It was a great conversation. Nick, thank you so much.
Thank you both.
Thanks a lot for having me.
Pleasure.